Welcome everyone to tonight's BullCharts user group webinar. We're getting underway now. For tonight's session, we will have a presenter displaying some slides, maybe demonstrating BullChart software. And please remember the disclaimer. I think everyone's well aware that any of the information presented tonight is for discussion only. It's for your education. There's no advice. The agenda that I shared for last week's Melbourne meeting looks like this, and I revised it a couple of days beforehand. I revised it because um, I published it at short notice and totally forgot that Alek very kindly offered to do a presentation of some sort for us at our next meeting tonight. So I've revised the agenda. And last week in Melbourne, we did actually talk about investing themes and making money in 2026. And a summary, some sort of a summary of discussion is in the minutes of that meeting that I'll show you in a moment. And item B in the agenda then was Alek doing the presentation or leading discussion tonight on the Heikin Ashi Delta indicator. Alek, let me just do a quick introduction. For those of you who don't know, Alek is based out of Sydney. Alek has been a BullCharts user for many years, active in the user group, has done this presentation or one very similar back in 2021. It's up in the Google Drive. Alek clearly loves Heikin Ashi. I think it's safe to call him expert in this topic. Alek, it's over to you. Please take it away. Thank you.
Okay, thanks, Robert. Thank you for allowing me to do this presentation tonight. Just a little bit of background. I got involved in Heikin Ashi quite a number of years ago, mainly because I met when I was a director of the International Federation of Technical Analysts. I took over the role from a guy by the name of Dan Valkew. Dan is, in fact, the guy that introduced Heikin Ashi to the Western world, and he's in fact written a couple of books on the subject, which I'll refer to at the end of this presentation. So because of my association with Dan, I sort of took an interest. He obviously encouraged me to take an interest, and I read the books and played with it and, got a bit of advice from Dan, and I found it, for me, works particularly well. So back in 21, I did a presentation for this group which spoke generally about the Heikin Ashi candles, and it was mainly, how those candles were developed, why I found them more useful than the standard Japanese candles. And I did mention towards the end of that presentation about improving on the candles, in fact, using a method which sort of, I suppose, quantifies the candles to a point. So, and that indicator is what Dan named the Heikin Ashi Delta indicator. And basically, that's what I'd probably like to focus on tonight. Just very quickly, why do I like it? Because Heikin Ashi candles are extremely easy to read. The color changes and the shadows on candles indicate very clearly the strength of the candle, which way the trend is going. You do have doji-like candles with upper and lower shadows which tend to precede a trend reversal or might be a period of consolidation. Unlike Japanese candles, you don't have gaps in Heikin Ashi candles. In fact, and I'll show you this as an example later on, where a gap occurs in Japanese candlesticks. In fact, in Heikin Ashi candles, it just becomes a strong, long candle. And generally, looking at them, the turning points are much easier to see. Basically, if you look at Heikin Ashi candles, there's only three of them. the up candle with the shadow going above the candle, the downtrend when you've got the shadow below the candle, and then you've got the doji candles, which, as I've already mentioned, indicate either a potential change of trend direction or alternatively a period of consolidation. And this is really summarizing that. Green candles with no lower shadows is an uptrend. Red with no upper shadows is a downtrend. Very easy to recognize, and really you can look very quickly glancing at them. You can see the change of color and the direction of the shadows. And remember, very simply, the direction of the shadow is the direction in which the trend is going, either up or down. And here you are very quickly. I don't know if my pointer works on here, but you've got, for example, here a downtrend, and you can see basically you've got solid candles with, in each case, the shadows heading downwards. And on this side, you've got long green candles and with the shadows up. And basically, too, the strength of the trend is also indicated by the size of the body of the candle. So you can see here you've had candles of increasing height, and then the trend is easing off a little bit, picked up again. So it's really very easy to see. And a period of indecision or consolidation is a period like this. Looking at it on a BullCharts chart, here you have the standard candlesticks. Here you've got the Heikin Ashi candles, and as you can see, it's a lot easier to see. You've got a period here, for example, in the latter half of 2017, where you look at the Japanese candlesticks, you've got quite a mixture of red and green, and immediately to the eye, it's not readily obvious what's going on. You look at the same period in Heikin Ashi, and you can see basically you've got virtually a green trend most of the time, except for this little bit here in the middle. Looking at charts, if you view your charts to make decisions, you can very quickly see what's going on when you look at a Heikin Ashi chart. Likewise, I mentioned here's another one, a similar sort of situation, a very clear uptrend here, not as obvious there. And here, I mentioned earlier, you've got a gap in the chart, whereas the equivalent on Heikin Ashi is just a big upward candle. So again, much easier, I believe, to interpret than what you see in Japanese candlesticks. The construction, look, I don't want to go into this particularly, but this is how the four components of the candles are calculated. I'll leave that for you. This presentation will be available. Robert can put it in the BullChart user group section, and you can look at all this. But likewise, there's nothing unique about this. You'll find this if you look up Heikin Ashi candles anywhere on the internet. Very easy to follow. The one thing that I might, if I go back one or two candles, one thing you will notice, if you're not sure, for example, whether you're looking at Japanese candlesticks or Heikin Ashi candlesticks, one very clear giveaway is the fact that the next candle always starts in the middle of the body of the preceding candle. So you can see with all of these, this one starts at the middle of the body of that one. This one starts in the middle of the body of that one. And that is something that is unique to Heikin Ashi candles. So you can very readily see, I think I was looking at something in TradingView the other night. Some guy was explaining something. What he failed to say was that he was actually using Heikin Ashi candles. It was pretty obvious, but maybe not obvious to people that aren't familiar with Heikin Ashi candles. So that's the calculation of it. effectively what Heikin Ashi candles do is filter out the noise. You're basically getting a clearer interpretation of the trend. It does work in all markets and across any time frame. Talking of time frames, I do find that weekly time frames I find are probably, to my way of thinking, more effective than others. You can use it on daily time frames and it works perfectly fine. But I have found that generally, and maybe it suits my style of trading, that weekly time frame I feel works better for me anyway. So all thing again, something that I will come back to a little bit later. It can be used as a standalone, but best used with other analytical tools for confirmation. And this is where I'll come into the Heikin Ashi delta. So in effect, in developing the Heikin Ashi delta, you're trying to quantify the Heikin Ashi candles. Now, as we looked at earlier, the bodies of Heikin Ashi candles are the main elements used to indicate and measure trend direction. So when we were looking at the chart before, we saw the trend strength improving as the body of the candle got greater, and that showed it was a measure basically of the momentum of the trend, the stronger bodies. And in fact, you could add to that, if you've got longer shadows heading above a green candle, then that's positive as well. Heikin Ashi delta was initially developed very simply by taking, it's the measure between the close, the Heikin Ashi close and the Heikin Ashi open. So if you get a long candle, it tends to push the value of Heikin Ashi delta into larger numbers, either positive or negative. Shorter bodies bring the Heikin Ashi delta measure closer to zero. So here we are. You've got your basic candlesticks. Here you've got the equivalent Heikin Ashi candlesticks, and this is the what I'd call the raw Heikin Ashi delta. So here you are. You can see this is probably the biggest Heikin Ashi candle on this chart, and you can see that takes the Heikin Ashi delta, which, as I said, is the measure of close minus open. So it's the close value minus the open value, and that's where you get this high. This you can see would be the second largest candle on this chart, and you can see the Heikin Ashi delta is at this point. The same works for negative. You can see the measure of the negative values here, but these, of course, are values below zero. So that's it. The problem with that is, as you can see, this is still does provide a lot of whipsaws if you were to use this as a raw measure. So it is very sensitive. You can certainly see when Heikin Ashi delta achieves extreme values, either on the high side or the low side, you could expect that there's going to be a reversal. But because of the whipsaws that are involved, and especially in slower trends and during consolidations, it's hard to use over longer time spans. So if we look at something here, which is what, about 4 years roughly of trading, you can see this Heikin Ashi delta, I wouldn't think would be very useful as an indicator to judge what's going on here. So in effect, this is where the Heikin Ashi delta was improved by, first of all, taking a 3-bar simple moving average of the Heikin Ashi delta. That does provide some improvement, and we'll see that on the following chart. However, you get an even better improvement if you take a second simple moving average, just a 3-bar, of the first simple moving average. And you can read these things for yourself, but let's look at what that means. Here's the same thing we were looking at. The blue line is the original Heikin Ashi delta raw figure, and the red line is the first 3-bar simple moving average of HA delta. So now you're getting to a situation where the crossing between these two starts to give you some more sensible results. For example, where the raw Heikin Ashi delta crosses the simple moving average, you see it indicates that the trend is going up. But that's the first step. The second step is, in fact, to take away the raw Heikin Ashi delta and add a second 3-bar simple moving average. So now you've got, in the red line is the first 3-bar simple moving average. This one is the second 3-bar simple moving average. And now the crossovers between these two are starting to give very sensible results. And as you can see here, where the red line has crossed over the green can be the start of a sensible upward trend. So what would be the trading plan? First of all, it makes sense to use Heikin Ashi delta, but in conjunction with a Heikin Ashi chart. You would buy when the first, and in our case, this was the red line on the previous chart, crosses the green. And it actually is better if the crossing is above the 0 line or just below 0. So if we were to head back to this previous chart, as you can see here, this is the more or less ideal situation. You've had the red cross over the green, and as you can see, that's the start. So if you would buy there, you can see that's the start of an uptrend, right? Less successful is if you've got a situation here where the red crosses the green, but you're a long way below the 0 line. Where the crossings take place below the 0 line, you generally get less successful trades out of that situation. So what you're looking for would be situations like this, where it's either above or very close to the 0 line, it crosses above it. So here, for example, I would be keen to, or sensible, I could take a trade immediately after this cross. So I'd be here somewhere, and you could follow that all the way. A warning is when the red crosses back below the green that the trend might be heading down. You certainly want to be out by the time the red line crosses the 0, but you would really probably be better off starting to think about getting out at this point here. And as you can see, if you had have taken that trade, you would have gone from there to there, and even if you waited till it crossed down here, you're still reasonably at the top end of that price movement. One thing you've got to remember when you're doing this, don't get confused with the value of Heikin Ashi candles to Japanese candlesticks. The Japanese candlesticks give you the actual value of today's trading. The Heikin Ashi candles don't. And I know sometimes I've been so engrossed with a Heikin Ashi candle, I'm sort of thinking, why the hell isn't this what it's telling me the trade or the day ended at? And because I'm looking at the wrong candle. Just a bit of a warning. So that's the trading plan, how you would operate it. And look, here's just a few examples to see what's going on. See again here, a cross so low below the 0 line hasn't given us, it's an improvement, but not a wonderful trend. If you had something like, you could maybe argue whether you'd take a trade there, probably not. You'd probably wait till the red's above the green, above the 0 line. If you were to take a trade there, you would have had a very nice, roughly from about $30 to what, $36, $37 in that trade. So, all in all, I find the Heikin Ashi Delta is very easy to read. I'm just looking for these red above green crossovers, and particularly, and look, when do you get out of the trade? You should start taking a warning at the point where the red crosses below the green, but you definitely want to be out of the trade by the time the red hits the hits the zero line. Here's a situation where you might have chosen to get out of the trade there, but you probably would have fairly quickly looked at this and said, oh, I should get back into that trade again. And you've got an opportunity to go from there to there with a successful trade and then get out, hopefully, somewhere sort of in this area. So another example, here you've had a situation where there's been a cross a little bit back further there. You can follow this through, and I'll talk about why I wouldn't get out of the trade there, even though it's gone below. And I'll show you what I do in those circumstances. But here's a good situation again. The trade's not so good there, but now the red's gone above the zero line. I'd be quite keen to get into the trade at that point. So you'd be somewhere around here and follow it all the way up till, somewhere around this point where you'd get out. And also, if you look at the Heikin Ashi candles around that point, this is where you've had your first down candle. So possibly, I tend to look at maybe 2 down candles before I, get too concerned about it. But anyway, that's the way I would trade it. Here's another example again. You're going up through here, a nice long upward trend here, a good entry around this point. You are below the zero, but you're not far below the zero. Now, what am I doing to add to? You remember I said earlier that the Heikin Ashi delta is not a holy grail solution on its own and should be used with other indicators. I've been using this template layout for a little while. And why do I like it? Well, basically, we've already spoken about the ordinary candlesticks, the Heikin Ashi candlesticks, but I've added to the Guppy multiple moving average, and I've modified the Guppy a little bit to change it to what I think gives me a better outcome. So I add those. So before taking a trade, I'm not only looking at the fact that the red's above the green and it's crossed the zero line, but I'm also looking here. So my first interest would be when this multiple moving average, in this case, there's usually not much difference between these two, but in this case there happens to be. I'd be looking at taking a trade from where the bullish multiple moving average takes place here. I've also added an RSI, and I really like the fact when the RSI is above 50. So, really at this point, I've got all 3 things working. I've got the red above the green, I've got a bullish guppy, let's say, and I've got an RSI over 50. With the 3 of those together, I feel very confident. And as you can see, the end result from that was really a nice move up from probably a little bit below $2 to what, $4.80 or something up there. So, that's not bad. This is a weekly chart, by the way. And likewise here, another example, same sort of thing. And as you can see, when I said before, I usually don't get too worried if there's just a couple of red Heikin Ashi candles in the middle of this. If the multiple moving average is still bullish. I feel that sort of, and particularly if I've got an RSI which is still over 50. And if you look at the Heikin Ashi delta, it's staying above the zero line. So that's still, I think a good situation. At this point, you've had a fair drop off. You've got more than two. By the third one, let's go back. I'd be quite concerned, and I'd be getting out of that trade. So that's really what I've got. I mentioned earlier the two books by Dan Valque, which are available from his website. That's the website for those that are interested. Unfortunately, I never did negotiate a commission with him for the sale of his books, but they are worth reading, and they're now written a little while ago. This was the first one that he introduced basically to the Western world, and this is the second one where he starts to introduce indicators like the Heikin Ashi delta and a couple of others that he's developed to improve upon the original Heikin Ashi candle. So that's it, gentlemen. That's really all I've got, and I'm more than happy to take questions. Or if anyone wants to see a chart, I could switch to BullCharts and bring up any one that you might like to look at.
David, you've got a
Oh,
question.
Yes,
I'm
I have.
happy to go back to any slide that you want.
Thank you, Alek.
Alek, can you bring up evolution mines?
Up there. Here you are. That's
An
BullCharts.
application. Yep, it is. Yep,
Yeah,
very good.
That looks better.
yeah.
Now, David, you wanted to look at
Evolution mining, because it back in the middle of the year,
what's that, EVT?
EVN.
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 Okay, that's a daily chart. Let's just flip this to weekly.
Weekly.
There you are.
Yeah.
And let's maybe, how far back do you want to go?
Oh, it had a fairly severe pullback in June, and then it started to recover. I guess the question I would ask is, at what stage would you have said, right, enough's enough? I note there looks like you've got a green doji and a red doji. Is that the signal that you would say it's time for me to bail out?
Well, David, as I said earlier, you usually want to definitely be out of the trade when the red line crosses below the zero.
Right.
So I've now got that on where the red line crosses the zero, which is that point there. And you
Right.
can see that it's on the first of the Heikin Ashi red candles
Yeah.
and the second of the Japanese candles towards the top. I mean, at that point, you probably should really look seriously whether you want to be out at this point where the red crosses below the green, but definitely where the red crosses below zero. And in this case too, I would definitely be out because as you can see, the RSI is now come down very quickly.
Right. Dramatically.
That to me would be a real danger point, even though the overall trend is still generally bullish.
Yeah.
If we looked at, that's on a 1 year scale, let's look at 3. And I suppose if you look at 3, it's really been going up since April 24. Yes, it had this dip you talked about in June, July this year, but the overall trend's been, very positive, hasn't it?
Yes, yeah, you're right. You're absolutely right about the RSI. It dropped off dramatically, didn't it? It went from about 70 down to about 40, and yeah,
yeah. And when you look at the previous history of this one, if you go back, that's a fairly dramatic drop compared to things we've experienced earlier. I mean, there's a drop too, but it was far more gentle, isn't it?
Yeah, yeah.
So. Any others we want to look at?
No, that was one that sort of intrigued me because I gave a bit of profit away there, and because I wasn't quick enough. But anyway, that's life.
See, even there, David, if we look at that, I know you had a drop off, but there's again a very clear buy opportunity
Yeah, yeah.
based on the Heikin Ashi delta again. I must admit, I like when these lines are sloping far more strongly than say here. I mean, that's positive, and as you can see, the price was still going up. But when they go up at that sort of angle, um, usually indicates a fairly strong upward trend. And there, see, you've got a whole lot of green candles, all with only upper wicks, so that's pretty positive. These three were reasonably dramatic, and again, you really should be probably out of there, particularly with the RSI going out. You might, I don't know, you know, if you do it, if you're being quite discretionary about it, you might sit these, you know, this period of time out because again the trend re-established fairly nicely, you know, going forward. But I would have been more comfortable if this RSI remained, you know, more even on here.
The last two candles, Alec, that suggests to you that the trend is strengthening. I mean,
Well,
you
yeah, look, certainly the momentum here because you've got two quite long bodies in the candles. That's, yeah, quite positive.
yeah. Thank you.
Alec, would you be able to look at Drone Shield?
Yeah, what's that? DRN?
DRO.
DRO. Oh, that's a cute one, isn't it? Let's bring that back to a year and see what that looks like. Interesting. Well, you've sort of, you would have first got interested at this point, but as I said, I wouldn't get excited because the difference between the red and the green is very little, and it's just it's got little upward angle. It's, you know, sort of floating along, even though the price did go up over that period. I Yeah, I wouldn't have got all that excited about that, even though you had a good RSI up over the 70 mark. Yeah,
It
but
certainly gives a lot more information. I mean, I've been looking at it via the Japanese candles, and I think you could get misled until you add your Heikin Ashis on, you get a different picture altogether.
yeah, well, that's really what I found when I first got involved. Look, I tried for a number of years to gain proficiency in Japanese candles, and as you know, there's all sorts of things that you need to be aware of, different combinations of candles, and this, that, and the other. I'm sorry, it was just too much for me. I just couldn't absorb all of that. And then when I got or became aware of Heikin Ashi candles, it suited my rather simple way of thinking, and I found it extremely, you know, easy to follow. And that's why I've sort of stuck with it. And really, Heikin Ashi has become my main trading tool, you know, going forward.
Yeah, no, thank you. That's great.
Alec,
Yes, Gina.
how are you?
Good.
Do you ever incorporate a daily chart to give you
Yes, yeah. I think I mentioned earlier, Gino, that the Heikin Ashi candles work quite well on a daily, weekly, or monthly, whatever you like. I find personally that the weekly um, I find is better. But let's. Have you got any particular one you want to look at, and we'll look at it.
LYC.
LYC.
Yeah.
Okay.
So I was thinking if you use the weekly for a more bigger picture chart, and then you're using a daily to give you quicker responses, you know, exit signal or a tighter entry sort of thing.
Yeah. Well,
so you're using two time frames. You know what I mean?
Yeah. Well, yeah, and quite correctly, it's really very encouraging if you are looking at your trade in, say, daily terms, and
Yeah.
you also then look at the weekly, and that you
Yeah.
find that the trend of the weekly is in the same direction as the trend of the daily. That gives you a lot of confidence, I think, going forward. So that one, for example, we're looking at a weekly there over a 3-year period. If we pull that back to 1 year, and now let's turn that into a daily.
Okay, you're turning both charts into dailies. Yeah. Okay.
Yeah. So, I mean, this one, if you were looking at it on a daily basis, you've still got quite nice signals going with the Heikin Ashi daily candles. I mean, look, you've had this period here, which has sort of been almost a consolidation. It hasn't done all that much over that period. You're starting to see, again here, where the Heikin Ashi delta has gone above the zero line and stayed above the zero line, and you've had this nice trend up over that period. And again, the same thing here. You've had the red cross above the green and stay above the zero line, and you had quite a nice upward line here. Of course, what happened here is you had a very quick drop. You should have been out at that point, where the red line crossed below the zero. And as you can see, the Heikin Ashi candle showed a dramatic drop, as of course did the price. And since then, it's sort of done more going sideways. I mean, you've had a situation where it played a bit above the zero line, a little bit below, a bit above. You've had a bit of an uptrend here, which is probably right. The red's gone above the green. The thing that would, I suppose, confirm it, if you've had the RSI go above the 50, that would be another positive signal. During this period, you've had the RSI below the 50, and therefore I think that supports the fact that you wouldn't want to be in it over that period. And again, if you look at the Heikin Ashi candles over the same period, would you want to be in it? No, you wouldn't.
No.
And
No.
the guppy also shows that it's in a bearish trend over that period.
That's right. Yeah. Good. What about LOT? LOT.
Don't even know what that one is.
Uranium stock.
Uranium. Yep. I've been looking at it too, Gino.
Yeah, I was thinking it might be a bit of a trend reversal, but they've had
it was on my radar. I haven't done anything about it, but it's on my radar.
Yeah.
Yeah, look, looking at that, I would say that it's definitely on an upward trend here. If you're wanting to be, let's say, a bit more conservative, I mean, in theory, you should be able to get in at that point. And if you did, you would be in the money. If you're being a bit more conservative, you might wait till the guppy also signals a bullish trend. And at the same time, you've had the RSI cross over the 50. So, you've at this point, certainly you've got 3 supporting signals, or even 4. The candle, the guppy, the Heikin Ashi delta, and the RSI. And if you had have got in that, 4 weeks ago, you would have probably done, quite nicely from $2.35, and what's it closed at the moment? Oh, sorry, I've done the same thing I talked about before. You would have got in there at $2.12, and what's it gone up to? $2.99. So, still a reasonable improvement over 4 weeks.
Yeah, great. Thank you for that. Yeah.
Alek, I'm wondering, and Gino touched on sort of this question when he asked about daily. I'm wondering if you've looked at using the weekly the way you do, but maybe looked at the daily to see if that can improve flagging a possible exit earlier than waiting for the weekly.
Yeah,
So using a combination of the two timeframes?
Yeah.
No, look, directly, Robert, no, I haven't. As I said, I tended to use the weekly more than the daily, though I have traded using daily only, but I haven't really compared whether that gives me quicker or better exits.
Okay. Alek, can you tell us a bit more about the two ribbons, please?
The two guppy ribbons.
Yeah.
Yeah, look, the top one is the straight guppy as per provided in BullCharts.
Mm-hmm.
So that's the standard that everybody gets. This one is one that I've modified slightly, and what I've done, I've forgotten the details. Hang on, I should be able to bring it up, shouldn't I?
Mm.
Formula.
Yeah.
Now, I've forgotten what I did here, but so long ago, Robert. I'm sorry.
Never mind.
I took the original and then I looked at the crossing of what I've done here greater than the 30, 3 greater than 30 or less. That's right. I took the smallest of the guppy short-term candles, which is the 3.
Yep.
And looked at where it crosses the shortest of the long-term candles, 30. Yep. And I've used that as the point to decide where it's gone from bearish to bullish.
Okay. Yep.
So it's not a major change, but if you look at some of these, I don't know if I can get this on a longer chart, you can see there is not a lot of difference between the two. You can see in most cases the bearish on that one started. My one starts just a little bit earlier, as does the bullish. So I suppose if I look at these, maybe mine seems to respond a little faster than the guppy. That's all.
Okay. Very good. Thanks.
I don't think it is critical to the decision making.
Okay. Thank you, Alek. Kevin, did you have a question?
Yeah, just on the RSI and how's it filled? Above the 70 and below the 50 and all that sort of thing?
I think that was
part of the coding?
I think it's taken straight out of BullCharts. I think indicator. Let's see. Yeah, there it is. RSI coloured.
Oh, PH is Phil Hamilton.
Probably. Yeah, that's not my work. Yeah, that's right. RSI coloured PH, Phil Hamilton.
I'm just looking to see if that's in the Google Drive. Oh, I can't see it.
Well, isn't it just in? Well, unless I took it from the Google Drive, or all right, I'll stop sharing if you've had enough.
All right, very good, Alek. Thank you. Round of applause.
Thank you.
Alek, thank you for that. Okay. Any other questions about BullCharts?
General comment, Robert.
Yes, David.
I think sometimes with layer manager, I have a tendency to have probably a couple of extra indicators that I don't need, and I find even if you blank or you take the untick the box, it still leaves what shall we say? It still keeps all those parameters there in case you want to bring it back on. So my feeling is that if you've got indicators that you may or may not use, you're better off to delete them right out of layer manager, and then later on if you want to bring them back in, because otherwise they affect the amount of chart that you can see. And one for example that I use is a Wells-Wilder volatility stop, and I couldn't work out why my charts were sort of all being compressed into the middle, and then eventually I could see, well, I'd untick the box, but as soon as I removed it, I got my chart from top to bottom. So it's just a bit of housekeeping, that's all.
I think what you're saying is that an indicator that you might have on the price chart, but which you've hidden with the layer manager, ends up compressing the price chart like this sort of thing.
Yeah. Yep.
Yeah.
Yeah.
Yeah, you're right.
Yeah.
Yep. And I guess if anybody has that situation and they're afraid to delete the indicator off the chart, then all they need to do is create a template first.
Yeah.
And have the template handy so that they can reinstate it easily later if they wish. And it's easy enough to do. I've got my template toolbar across the bottom here. I think you can see that. And on my other monitor, I've filled the space across the screen in terms of the template toolbar. I've got so many along here, many of which I do use from day to day and week to week. But it's easy enough to create a template and add it to that toolbar for anyone who's not sure about how to do that. We can demonstrate that at some stage if anybody wants. Very, very briefly, just to demonstrate a couple of the ones I've got down here. I've got some green toolbar buttons down here. This W2 is my Weinstein view of the world. And there's a big gap at the top of this. I'm not sure why that's there. Maybe I've got something hidden. But that's weekly chart with Weinstein's 30-week moving average. And I can easily change to a chart of whatever the stock or the index is. And I've got two versions here of momentum and smooth momentum. So I can check momentum. Then I've got Twigs money flow. I've got Guppy multiple moving average, daily on a weekly price chart. I've got candlesticks with most of the names enabled, so I can see what the names of the candlestick patterns are. On balance volume, I've got volume with volume moving average, and I've also got a 10-minute chart. The black's 10 minutes, the blue line is daily. See, I can easily switch from one to the other because I've saved each of those as a template, and I've got those templates added to my template toolbar. Thank you, everyone, for your participation tonight. Let's end the session, and we'll look forward to being in touch again in a few weeks' time, if not by email in the meantime. Thank you, everyone. Good night.